Hi, Victoria here from HBA Encompass, the Bookkeeper Hub and author of Zest for Success. Back in for another episode on business and taxes, nearly as bad as death and taxes, but this one's essential to you in running your business, and the type of taxes we're talking about today are the ones that apply if you have staff. So there's two taxes I want to talk about today: PAYG or pay-as-you-go tax. I want to talk about payroll tax and also superannuation guarantee. Now, we have covered them a little bit when we were talking about staff a couple of weeks ago, but I'm just going to cover them in depth. So if you have staff, you are required to take pay-as-you-go tax out of their wages. There is a table that you can download from the tax office if you want to do it in paper that actually says for how much everyone's gross wage is, how much tax you would take out. And if you use a computerised program, it will automatically work it out. If the tax that you pay for all your staff is less than $25,000 a year, then you report that pay-as-you-go tax quarterly on your business activity statement. If it is greater than $25,000, then you have to report that monthly. So it is possible to have PAYG or pay-as-you-go tax reported monthly in an activity statement, and then a quarterly business activity statement, which is your GST. The next one is superannuation guarantee. When you have staff and they earn over $450 in a month, then you are required by law to pay 9.5% of their wages into superannuation. So we covered that in wages, but just keep in mind that that needs to be paid at least quarterly by the 28th day following the end of the quarter. And the last tax I'm going to cover very quickly is called payroll tax. Now, it is a state government tax, and to me it is probably one of the most evil taxes that are around, because what it does is it penalises the business owner on growing and getting more staff. What a crap tax. So if you have if you have staff wages, including superannuation and permanent contractors, of over $1 million, then you are required to pay to the state government a tax for the joy of employing people. Now, different state governments have different cut-offs. I believe in Queensland it's 1.1 million for this year. The best thing you can do is to Google payroll tax and your applicable state to find out what the rules are. Generally, it's my understanding that as soon as you realise you are going to reach the threshold, you need to register, and then you can pay that while you're in a transition period, which is wages from 1 to 5 million. I believe you can pay it either monthly or half yearly, but once you get over that 5 million mark, you have to pay it monthly. And I don't know about the other states, but I know that in Queensland it's got to be lodged by the 7th day after the end of the month. So January is always a shocker if we're still on holidays and payroll tax returns need to go back in. Someone's got to come in and do them. So they're the three main taxes on businesses with employees. The only other tax that is relevant is perhaps stamp duty, which again is a state government tax, and it is a duty that is payable on the purchase of property, and that property can include shares and units, something you need to have a chat to your accountant and your lawyer about when you buy assets. It's a tax that's always levied on the purchaser, not the seller. Okay, that's all I've got to say. Or your task for today is to make sure that you are registered for PAYG, you are registered for super, and you keep an eye on the payroll tax threshold, and you make sure that you get these returns in on time so there's no penalties, no interest. Because some of the interest that these things charge if you don't pay them, PAYG is 14%, super is higher than that, and payroll tax I think is something like 25% on a daily basis. It's something absolutely horrific. So I'll see you on the other side.